Perfect. Okay, so I suppose we shall kickstart this off, highlight a little bit into RCK, what we do, how it's going to benefit you lot and you guys and girls, should you, of course, be looking at acquiring, renovating any form of commercial property or developing it, and as well, of course, aspects of land remediation as well. So I'll let Angelica kickstart us off, and I'll come in on the side where they actually go through the property services themselves.
Lovely stuff. All right, thanks, Matt, and thanks everyone for joining. Um, First and foremost, I want to extend a thank you to Steve and the PSN community for allowing us the opportunity to share the services that we offer here at RCK Partners.
If you
So
like,
really
I'm
glad to be
here, honestly. It's all right. Thank you.
here. Perfect. So yes, by way of introduction, I know you've already sort of met us now, but Matt and I sit on the commercial side of the business. So that means we are client facing. And then the business is split between the commercial side, the technical consultants that know the legislations very well. And then we also have an independent compliance function, which is the sort of third part of the business. But as of myself, so I sit on the innovation tax team. So I mainly do R&D tax credits, so research and development. So for those of you who don't know, research and development tax is a incentive that reduces the corporation tax of UK limited businesses to reward them for investing in innovation. Innovation being sort of problem solving and incurring sort of trial and error as part of a process to problem solve. And that can extend to almost all industries. But just to name a few, software companies, AI, construction, manufacturing, and precision engineering, just to give a few examples. But for the purpose of the presentation, we're talking about property tax, which is Matt's domain. So Matt Corr, my colleague, sits on the property tax team at RCK. So I will shortly be handing over to him for a little bit more in-depth knowledge there. But in terms of ourselves, as a company, our main aim is to provide sort of a client-centric approach and just make the client's life very easy for any sort of claims that they are involved in. So essentially what we do is we aid and optimize financial planning for UK limited businesses and property developers and investors by sort of improving their cash flow, and reducing the cash liabilities through the various services that we're highlighting today. So in the presentation, I'll just introduce RCK briefly, a very brief mention of the services, and hand over to Matt for capital allowances, business rates relief, land remediation relief, and then I will touch upon why RCK Partners, what's in it for me, and then the point of contacts. So yeah, without further ado, so RCK, we are located in the heart of the City of London. We're a leading financial consultancy specializing in property tax and innovation funding, as I mentioned earlier. Since inception, we have onboarded over 2,500 clients, delivered 3,409 claims, and generated client savings of 145 million. In terms of our culture, I describe us as a very friendly company. You know, we often like to invite clients and affiliates or referral partners to visit us in our office. You can see Leadenhall Market in that picture there, which is right outside our office, which is very nice to go for sort of lunch. But yeah, very sort of client facing, love to meet face to face, and we believe a lot of business is done in person. So yeah. And then in terms of our success, so where we've had the most amount of success has, I'd attribute it to our sort of heavy investment into the compliance function, because compliance is at the heart of everything we do. Similar to what Nick said, you know, when you're dealing with taxes, it can be very tricky, and HMRC do sometimes flag certain things, which is why we have done sort of our own due diligence on every claim we put forward to HMRC and use our independent of in-house compliance and review team to do that. So yeah, in terms of, so sort of due to that aforementioned success, last year, actually, Lord Philip Hammond, the ex-Chancellor of the Exchequer, joined the business as a senior advisor. So Philip Hammond was instrumental in a lot of the services that we're about to talk about. And so he provides us some good insight there in his role as an advisor. But shortly, I'll give over to Matt for a little bit more information into business rates, capital allowances, and land remediation. And then we won't be discussing research and development today, but that's something else that we can do along with claim resolution services, which is essentially if you've gone with a different company and a claim's gone wrong, we can negotiate on your behalf and take on that claim and defend it until success.
Perfect. So before I jump into this one, obviously, thank you, Angelica, for giving the oversight and overview there. Yeah, just to touch on that and go over a little bit about the services and the compliance function. I suppose having Lord Philip Hammond within our kind of senior advisor on our board, it kind of gives us this kind of an enableability to kind of have a good understanding of the tax incentive landscape. Now, it's going to be consistently changing, altering, adapting throughout all the future. But at the same time, having somebody with that knowledge, that experience, that vast kind of wealth of knowledge, especially when it comes to implementing these kind of areas, he's able to kind of give certain advisory kind of positions to highlight what we might be looking at expecting when there's upcoming changes in relation to government. Obviously, as it's been mentioned before, it's a little bit up in the air at the moment. There will be some changes to certain schemes. We know that there's been some conversation in relation to business rates. As of right now, top of my mind, the capital allowances and the land remediation, I'm not aware of anything that's happened to make sure that changes come into place as of yet, but we'll be keeping an eye on it as we progress further through and forward. So to jump straight into what capital allowances are. So capital allowances are a form of tax relief based off of capitalized expenditure. What we'll be looking at with that specifically is any forms of acquisitions of commercial-based property, any refits, refurbishments, developments, those kind of areas. Now, the premise behind why we have a capital allowances scheme is simply just to incentivize investment into commercial-based property. As individuals, anyone can really claim if they're a UK taxpayer. So we're talking limited liability partnerships, limited companies, partnerships, sole traders. If you bought a commercial property, it's something we can definitely look through and review in further detail. Within capital allowances, there are some key areas of focus. And obviously this slide that I've got here is quite extensive in relation to wording. So I will touch on it. And of course, we can come back to it and loop back at a later stage, or feel free to read and review in your own time. So you do have areas that we can kind of look through. Some support the R&D side, which Angelica already mentioned. But within capital allowances, you have super deduction, full expensing, and structures building allowances, as well as research development allowances. So super deduction is simply in the March 2021 budget, a temporary super deduction was announced. It's basically an incentive that provides additional tax savings and significantly accelerates the rate of relief for qualifying expenditures incurred by companies on their real estate between the 1st of April 2021 and 1st of April 2023. It's still in place at the moment, but the full expensing was introduced in the government's spring budget from April 2023 to March 2026. So that's what we moved on to. Full expensing basically allows companies to deduct the full cost of new and unused plant and machinery from their taxable profits in the first year of purchase. Full expensing, oh, hang on, got this stuff in the way. Move this aside. There we go. Sorry about that one, everyone. Full expensing simply is just replaces the super deduction, which expired in March, and it allows us to write off up to 100% of the cost of investment for qualifying plant and machinery in one go. Within structures and building allowances, it is a significant opportunity for tax relief in specific area. So it's tailored for newly developed non-residential buildings and structures. Under that provision, qualifying projects benefit from annual rate of 3% worth of relief, which is calculated on a straight line basis. So it would be 3% recurring annually across a 33-year period. And of course, as I mentioned, in relation to research and development allowances, RDAs, as abbreviated, are simply available for companies that are looking to incur capital expenditure on qualifying research and development. So for instance, as Angelica did mention, if you are conducting research and development, for instance, you might be a pharmaceutical company, If you're conducting research and development on that basis and you've had to incur capital expenditure building out a lab or anything other areas like that, that's something that we can then look through and try and claim some tax relief on that. I want to kind of highlight specifically because I know that a lot of you will have accountants, and I think obviously a capital allowance is something that your accountants do speak about with you on a day-to-day basis when it comes to fixtures and fittings and other areas. I think I want to highlight about where we kind of differ. So there are certain areas when it comes to rates of pull, your main rate, special rate, obviously SBAs. The main point that we try to do is try and find ways to augment and uplift work that's already been done. We're not really a company that's here to steal you away from your accountant. It's just more or less to do a kind of a healthcare check to make sure that everything's been fully itemized and categorized accordingly and allocated to those correct rates of pull. How we go about doing that, so I'll provide a few examples. Obviously, if we took it from an accountant's perspective, any forms of property will basically be listed as a entirety. Now, what we try to do at RCK is break down everything into its integral components and features, just so we have an idea and understanding of everything that is within that property. And that could be ironmongery on door handles, which is an area that we can claim on. It could be screws, hinges, keys, locks, anything that makes up the build itself is what we're going to be looking at doing. More specifically, certain areas that sometimes are missed as well are being, so in the image you can see in the middle of the screen there is a section for lighting and some plug sockets. Your accountant will be claiming lighting 100%. That's on a special rate pool at 6%. You can uplift your lighting if it's used for emergency use from 6% to 18% on a main rate pool, which means you'll be getting 12% increase in return on that kind of capital expenditure. And additionally, on top of that, we'll be looking at structural costs with associated qualifying plant. So naturally, if you're having floor sockets or sockets cut out on the walls for lighting, obviously your accountant will have probably claimed the fixtures and fittings for that specifically. But what we would be looking at doing is trying to figure out those structural costs for that cutout feature that's been put into place to try and fully scrutinize and uplift as much as we can. So within the capital allowances value adds, obviously acquisitions, refits and redevelopments, refurbishments, and construction projects. Typically with acquisitions, up to roughly around 30% of the purchase price can be qualified, or basically qualifying expenditure. So for instance, if you spent £1 million on a property, up to 30%, there will be certain things that tie into this that will bring that number down. Obviously, it's the age of the property, the year in which you purchased it, prior ownership history. When it comes to an acquisition, we do need to review everything with land registry just to have that good understanding of prior ownership history to see if any capital allowances claims have been made on behalf of that property, especially on acquisition. Now, under the Capital Allowances Act of 2001, Section 562 stipulates that qualifying expenditure has been calculated on a just and reasonable apportionment of the purchase price. So not many people are aware of it, but when you do acquire a property, if it's used for commercial-based use, you can actually look at trying to claim back an apportionment of the purchase price involved. As for refurbishments, refits, and developments, typically, we're looking at roughly between 70 to 90% qualifying expenditure of whatever you spent put forward. So again, if we were to say £1 million, between 700,000 to 900,000 is what would be your qualifying expenditure. Now, if we were to give an example on that and what that would look like in relation to allowances as well. So if we said again on the lowest end of the spectrum on £700,000 worth of qualifiable allowances based on a £1 million refurbishment, assuming a 25% corporation tax rate, that's, oh, hang on, 700,000. It's £175,000 worth of tax relief, which can be used to offset profits and basically help you guys out in the future. If you have a year end that's upcoming, let's say for instance August, and you have, or this August, you have got expenditure that you've made within the last 2-year period, you'll be able to utilize the allowances identified immediately when you next file your accounts. So for instance, if you have taxable, like profits to pay on your tax, tax to pay on your profits, how that would end up working out is, let's say if that number came to hypothetically £100,000 and myself and Angelica identified £200,000 worth of capital allowances, you'd be able to write off those tax on your profits immediately and utilize it straight away, and you still have £100,000 worth of allowances left to carry forward and use in the future. We also work very closely with purpose-built student accommodation, build-to-rent schemes. and of course, and buy to rent, and furnished holiday lets. But I've got some slide docs I want to show at the end, some little one pages which will highlight all of these and kind of and nip them in the bud a bit further. Furnished holiday lets is very important at the moment. So if you do have something available, or if you have one right now, or you know somebody that does, I would definitely speak with them about it. Furnished holiday let scheme is going to end in 2025. So it's something that I would look at utilizing sooner rather than later. I will touch on this towards the back end of the presentation a little bit further, highlighting qualifying factors to be able to benefit and use that relief in full detail. But as for commercial property types, see if I can bring this down out of the way. There we go, much better. As for commercial property types, we're looking, of course, anything really that's classified as a commercial property: dentists, bed and breakfasts, hotels, offices, industrial sites, care homes, apartment complexes, stadiums, pubs, restaurants. There is so many that you can choose from. If it's used for a commercial basis, we can look at it 100%. Now, the scope of services within RCK, initially, as I mentioned previously, when it comes to an acquisition, we'd want to be looking at confirming entitlement simply on the basis the fact that we have to review any relevant legal documentation, land agreements, construction schedules, just to confirm that the entity that's incurring the expenditure meets the requirement to be able to claim capital allowances for that purpose. Following on from that, we'll be then looking at doing a review specification. This simply would be a cost information, floor plans, liaise with the relevant consultants and design team members to clarify and contract variation costs, construction details, just so we have a full holistic view of what the expenditures being put forward. Following on from that, once we have all that information to hand, we'll be conducting detailed analyses and surveys. Now, that is simply to categorize all of information possible, every form of individual item, and allocate it to the most favorable tax treatment where we're satisfied there'll be a position for that tax treatment. And of course, undertake detailed survey of each work progress as it's going forward, which is obviously written and photographic evidence. Something that we do as well is we work in real-time assessment. So as you are buying a property, acquiring, refurbishing a property for any use, we can take photos, send it over just so we can see everything and the progression of the property. This all basically kind of is used towards our evidence when we submit our claims to kind of highlight those specific areas. Typically, of course, when you look at a property once it's completed, you can't see all the specific wiring, air conditioning units and everything else behind all of those kind of plastered walls. So being able to look at it from the outskirt kind of normally enables us to find a little bit more information for uplift. Specifically with that, we'd also be looking at builders' invoices just to cross-reference your expenditure with what they're charging you for, to try and make sure we've scrutinised as much as we can do and claimed as much as possible. Once we've gone through the survey and the analysis, we'd be looking at doing a reconcile analysis, which is just a capital expenditure summary, which basically captures and summarises all that expenditure incurred. And then we would conduct a fully disclosed detailed report to yourselves or to anyone that you were your clients or anything like that, where we would highlight all of the substantiation of the plant machinery and which reconciles the total additions to statutory accounts and, of course, provisional claims to be submitted if so required. As Angelica mentioned previously, we are underpinned by our compliance function. It's one of our main key things that we are pretty proud of at RCK. And with that compliance function, with the use of the tax, so accountants, chartered surveyors, RICS chartered surveyors, ex-HMRC auditors and inspectors, and also tax advisors as well, it enables us when we're ever in a position that, let's say hypothetically, that HMRC were to decide to inquire into works that we've got, we have supporting evidence and, of course, professionals in the workplace to be able to defend any claim that we put forward. Initially, the whole premise of the negotiation with HMRC is just to reach a commercially sound settlement if the claim is queried. Sometimes it means you can get, all of the money back, but sometimes it might mean a small drop off of that specific amount. But the whole premise of it is to ensure that we try to get as much as we specifically can do from what we've initially put forward. And of course, we would look at doing discussions with tax teams. So that would be with the finance team, tax team, accountant, regular basis to provide up-to-date information with potential savings to be realised within each financial period. So for instance, if that were to be with myself and people that are a part of this call, if you were to explain to me and say, oh, Matt, I'm looking at buying a property or doing a renovation, I would more or less sit down with you, go through your scope of works, what you're trying to achieve, how much expenditure you're planning on incurring, if there's going to be any forms of acquisition, if it's just going to be a refurbishment, just to have an understanding and then provide you with an estimation of the potential tax relief available to you. That pretty much covers on the capital allowances side so far. So I'll jump straight over to the business rate side. The business rates piece, I think, is very lucrative for people that have any form of commercial property. Much like any form of, all of us here pay council tax on our homes. Business rates is somewhat very similar. You pay a council tax on the commercial property that you are occupying at that period in time. However, this is the one type of tax that you pay to your council that you can argue and appeal against. So it's a subjective valuation. In a nutshell, business rates are a tax charged on most non-domestic properties in the UK: shops, offices, warehouse, factories, restaurants, pubs, everything. They're basically worked out as a hypothetical open market rate of rent at a particular set date in time. And these rates, they change every 3 years. So we are currently in the April 1st, 2023 list up to March 31st, 2026. The important side of actually having your rates looked at would be, is if, for instance, you are overpaying in specific areas, and let's say we are at the date we are currently. If, for instance, myself and the team are able to find and allocate a reduction in place, what that would look like for you is potential return, so a rebate of money already spent in the previous year. And of course, going forward, your actual payments would be realized to be the correct amount they need to be. So it might be anywhere between a 10 to 15% reduction. It really depends on what we source and find. Why should you look at claiming at it? Your local council can reduce your bill. They can do it for you, but they will never tell you how to do it. It really comes down to yourselves. Anyone can do this. It also just depends on, one, the capacity of time that you have, two, knowledge of semantics, case law, dealing with local council, and three, of course, it's then like, are you willing to put up with consistently going back and forth with the council? If, of course, the property is non-domestic, or let's say the property benefits the local community, so let's say the local council use it as a local hall or anything like that, it can reduce your bill. The same is applied as well, for instance, if you have any forms of construction works happening near or around your premises. If you're having any work done to the premises, and exemptions can be put into place. There are so many different forms of exemptions and reliefs that are applicable with business rates depending on the type of business that you're running. If you, let's say you're doing a retail business, that's 75% rate of relief applied to your rates. It varies in specificities next to industrial, warehousing, everything's different. But what's important to note is with the business rates is to, whenever you get your rates bill, you should consistently check your base rate, which is basically your pound per square meter. Now, your pound per square meter will highlight and your scheme reference will highlight the base range that you'll be basically paying a pound per square meter. So if you search your postcode on the Valuations Office Gateway, you can sit there and source that. Now, we normally go around it looking at that way specifically on the basis that when we find something, we'll look at it. The issue that you will find is the Valuations Office Gateway give you a brief understanding, but not the in-detailed stuff that you need, which is sometimes why you need a business rate specialist to fully come into play on this one. So this is our scope of services for business rates. I'm not going to touch on it as much as I did with the capital allowances, as they're very similar. Obviously, what we'd be looking at doing, again, surveying, resisting existing portfolio, identifying opportunities. With business rates, we want to get in early. So if we engage early with the valuations office from day one, it ensures that a fair and reasonable valuation is applied to the site itself, be it a campus, be it a hotel, be it an office space. What we're trying to do is make sure that everything is mitigated and is fair, because sometimes you won't find it will be fair. And of course, again, representation to make sure you have somebody appropriate representing you through every stage of it, which includes dealing with the local council, and if it has to get that far, representation at a valuation tribunal, and of course negotiating with the valuations office and discussions with the tax team. Finally, to touch on a little bit about land remediation, and this again is probably a little bit applicable as well. So it's available to limited companies, but it's a form of enhanced tax relief that can be available to UK limited companies who incur expenditure in remediating contamination in land or in buildings. So typically, the relief is generally available as follows. If you're an owner, occupier, or investor, it's 150%. If you're a developer, it's 50%. And if you're a loss-making UK company, you get cash tax credit of 16%. So a lot of people normally ask what kind of contaminants are covered. So land, it can be contaminated for any reason. It could, as long as it's not, well, basically it's something that could be harming living organisms, polluting like waters, impacting ecosystems, or structural damage to buildings. Typically, those contaminants might be, and I think maybe if you're buying old properties as well, you might have also come across it. It could be asbestos, it could be lead, it could be copper, zinc, heavy metals, sulfurous materials, hydrocarbons, Japanese knotweed, radon, arsenic, oil spills, anything along those lines will be able to basically be classified as a contaminant. Now, the main conditions for the relief is that, firstly, you aren't the ones that have polluted the land. It must have been done by somebody that you purchased the land from. We can look retrospectively with land remediation for 2 to 4 years once you've bought the land. Obviously, you need to have a major interest in the land being held, so a freehold minimum lease of 7 years. And of course, the expenditure is not being subsidised through grant funding. So we've got a benefit illustration at the bottom there. So to highlight that specifically on an owner, occupier, or investor rate, if I were to identify £2 million of qualifying land remediation relief, the tax would be as follows. So £2 million on that 150% will give you 3 million total. That £3 million worth of enhanced tax relief would provide a tax saving of roughly around £750,000 based on a 25% corporation tax rate. How does that sound so far? Does anyone have any questions before I move on to the next slides? Okay, perfect. So again, the scope of services, somewhat similar in relation to our capital allowances and business rate scope of services. With our initial assessment, we'll be basically looking for examination of the remediated land, including historical land conditions and any remedial activities. So we'll be looking at analysis of previous assessments, identifying contamination areas, assessing available relief options, and of course, basically having the goal to try and ensure eligibility whilst complying with regulations and maximising benefits available. Once we've gathered all the information, we'll do a full review, which will be environmental report, site surveys, financial records relating to remediation expenditure, and a detailed kind of review is conducted to identify the qualifying expenditures to maximise the relief claims. After that, we'll then do a detailed analysis. So it's a fully comprehensive report, fully disclosed, bringing together all that relevant information, those breakdowns of costs, the environmental assessment, outlining each aspect of those remediation processes from site history to the breakdown of the costs incurred. And of course, as always with most of our service lines, a detailed survey. Within land remediation, it is important to engage fairly early because considering the time limit is up to 4 years to claim on land remediation tax relief. If you're buying the land and you plan on holding it for a long period of time, but it was a brownfield site, it's definitely worth looking at it straight away. That's if you're also planning to develop it as well. Early engagement will just allow you for, access to tax relief sooner, facilitating essential tax planning for the future. And it will help you leverage the relief and investing other areas into your projects, or other areas of the projects you plan to go forward with and drive that project advancement. So that wraps up. I've tried to make that as kind of as short and little as intensive as possible. I do have a lot of one pages that I'm going to pull up towards the back end of this presentation and show everyone, but I'll hand over to Angelica for the meantime, just to go through the last slides of here before I bring up the one pages and we go further forward. You're on mute, Angelica.
Thanks for that. Yeah, lovely. Thanks, Matt. So I will just sort of whiz through, as I'm aware that we're a little bit behind on schedule. But why RCK? As we explained earlier, RCK are one of the leading tax incentive practices in the UK. So we've got sort of a team of diverse people with different backgrounds within the compliance. And so that consists of chartered tax advisors, surveyors, and chartered accountants. In terms of our approach, we have a very proactive approach. So we maintain relationships with clients throughout the process, specifically for research and development, because it's a retrospective process. When we maintain a relationship with the client, we get to sort of advise them ahead of their next claim, so they know exactly how to sort of do everything correctly and what to expect. In terms of our compliance, as we mentioned earlier, we've heavily invested in the compliance unit, and for obvious reasons, That's very beneficial to kind of the success of the company and the sort of saving and security of the client's claims. In terms of tailor-made team, so we've got many different teams that all work together to create sort of a fast process, very streamlined process, and a compliant process. But in essence, it's made easy for the client because we always have one point of contact that communicates to the client or yourselves. And then full disclosure approach and cost certainty. So that just refers to if there is an inquiry, it's included in our fee that we would protect the claim and defend the claim free of charge, as it's already agreed upon when sort of signing a contract. Yeah. And then what's in it for you? So if you have purchased or are thinking of purchasing a commercial site or property or land, sort of knowledge of these services and sort of a relationship with us will help improve your return on investment, which will improve the cash flow. You know, if you're generating a sort of rebate, or if you're generating a future tax reduction, that will also, you know, improve cash flow. And this all aids with financial forecasting because you're better able to plan your finances when you know that you're getting a certain amount back via different reliefs. Then, of course, if you are a sort of financial advisor or you have people in your network that are doing similar things with commercial property, you know, it will, joining sort of the referral partnership sort of scheme will help with kind of client retention, commercial relations, and goodwill. Right. I mean, if you're introducing someone that didn't know that they could sort of claim on land remediation, they get that sort of money back in their sort of expenditure, then, you know, it's happy days. So I think that's everything from me, other than these are our contact details. If you have sort of any queries, I think we've got our QR code for LinkedIn and contact details there. But how it would work is we would be the main point of contact, and then we would assess. Typically for the services described, it would be Matt, but for me, it would be the innovation tax side of things. So you would have the main point of contact, and then sort of Matt will assess whether or not there's scope for one of the services, and then if there is, and he advises to move forwards, then you'd be put in touch with a technical team, and they would sort of take it from there. But yeah, does anyone have sort of any questions?
That's brilliant, Angelica.
I
Sorry,
thought
Steve.
what I'd do
Great.
before we just jump a bit further forward is just to touch on these one pages, and these will be provided at the back end of this slide, this presentation, at some point tomorrow. I'm happy to send them over to you, Steve. We can send them out. But again, obviously, I mentioned furnished holiday let. It's simply just a short-term rental property which has statutory definition. The definition is important as long as a property meets certain conditions. You can specific elements of the tax which can be advantageous. So, bear with me a second. In relation to the qualifying factors, it's got to be furnished. It's got to be 210 days in a relevant 12-month period as letted. Out of those 210 days, let for 105 days more holiday accommodation. If it's long-term occupation, can't exceed more than 155 days in a tax year. Specifically with an FHL acquisition or development, could be as high as 25% of the purchase price when you buy that property. For developments, it could be even as high as 80%. So a good example of an FHL case study we have at the moment. So one of our clients recently paid 1.25 million for a furnished holiday let home. The tax relief that was generated equated to £105,000 to them, which they were then able to utilise in their profits going forward and benefit themselves, and they were moving a little bit on ahead. I do indeed also have slides for land remediation, a relief as well, giving a little bit more detail into the rates, the conditions, the benefits, what are the contaminants, developers, and how that equates to them. Obviously, with development, you get up to a tax deduction equating to 100% of the remediation cost plus a enhanced 50%. And of course, a business rates one pager explaining, of course, the way that we calculate them, what business rates are, how of course we can help, and obviously why use our team. And finally, we do have another page on capital allowances. I do plan to send this to you all. I just don't want to overload you with information straight off the bat. But if anyone is interested or has any questions or would like to have a further conversation, discussion with me or Angelica at a later stage, please feel free to let us know. But I suppose we'll stop here and just go back to the room and find out if